Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. You're seeing a sneak peek of it on the screen right now. It was ticker PX, and what this trade was a short trade. So the stock was gapping higher at the open. Some kind of good news hit the tape. The stock is getting a boost in the pre-market. What we did was identify a specific price level where the stock would likely find an area of resistance, what we also call overhead resistance. There was a high likelihood that the stock would then turn around and trade in the other direction, creating a scalp/day trade opportunity to catch a short trade profit as the stock is going back down. We're going to get into the specifics of this particular trade. Before we do that, let's take a step back and explain exactly what this gap trading strategy is all about and who is it for. As day traders, we need opportunity. In order to find opportunity, we need markets and we need stocks to be moving. In order to put money in our pocket, we need stocks to be moving, creating an environment we can take action on. So the real opportunity is for traders that can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. You've seen in other videos, we catch the support levels. A stock is gapping lower at the open. We find the highest probability support area. The stock reaches the support, spikes through it by a few pennies, and all of a sudden, just like magic, it turns around and trades in the other direction. This is the same thing, but flipped upside down. The stock's gapping higher. It reaches our resistance price. Immediately, the stock turns around and trades down in the other direction, creating a profitable trade. So what I do with this strategy is teach a course at LazyGapTrader.com. Traders who want to learn this strategy can come over and you learn everything you need to know to find success trading the gaps. Which stocks does it work the best with? What type of volume do we look for? How much of a gap higher or lower in the morning do we look for? How do you trade them? What's an appropriate stop loss limitation? What should the profit target be? And a whole host of other things, but here's the holy grail, folks. In the course, traders learn how to calculate and identify the specific price levels where these stocks will be drawn to like a magnet and have that price reaction in the other direction. That's the holy grail. You learn it in the course, and you can use it each and every day over and over and over again. We're going to dig into the chart a little bit further in a second, but I also want to show you the second thing I do, which is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Now this morning, trading was a little light in the pre-market. There wasn't a lot of activity going on. I had to dig really deep to pull out even two potential opportunities, but guess what? One hit its price target and produced a profitable trade. It was PX, gap higher, resistance levels are 165.48, and then I gave another level of 166.60. Stop and profit target is about 75 cents to $1.50. These are minimum profit targets. There are plenty of times where we get these big percentage gainers or multi-dollar winners out of these trades that are listed as 50 cents or 75 cents as a minimum profit target. Well, in the course, I teach traders how to turn some of these trades into risk-free, emotionless trades. Our objective is to pocket some profit right out of the chute and let the rest run for a larger gain. Anyway, back on the chart of PX, the stock closed yesterday at 158.22. So this morning in the pre-market, the stock's trading higher, allowing us the ability to look for an area that should be resistance to the market and likely reject price, meaning price will hit the resistance level on the way up. It will hit what's called overhead resistance. The stock will turn around and trade down and in the other direction away from, for example, the horizontal trend line at 165.48. So you see what happened. The stock opens up, it gaps higher, and it runs right into the 165.48. You can see in that first 10-minute candle of the day, the stock made a high of 165.60. Well within the stop loss limitation. Just minutes later, the stock is already at a low of 164.72. So the stock handed us the minimum profit target on a silver platter. But what's interesting is, even though the stock turned around and traded above the resistance level, above the trend line, it never went above the stop loss limitation and ended up coming back in and trading way down later in the day. The stock made a low later of 163.58. That's quite a gain off of a scalp trade given out to traders 30 minutes before the opening bell even rang. Now, granted, not a lot of traders are going to hold on after it went all the way back up above the entry price and then back down. I get that. But the point that I want to display is the power and importance of these price levels. These price levels have to be important. You see these videos over and over and over again, and you see where these stocks stop at support and stop at resistance prices over and over and over again. There must be more to that. And that brings up my final point. There is more to it. And traders that learn the why behind the strategy start understanding there's a whole nother world for traders out there that they need to understand and benefit from. You're able to remove a lot of the guesswork away from trading. I'm teaching that to you in the course. You can use this in other trading applications. You'll end up using this in your trading, whether it's a day trade, a swing trade, an investment, it doesn't matter. You can use these strategies in a multitude of ways. When you understand the why behind the strategy, why this works, not only do you remove the guesswork, but when you're entering a trade, you have a different confidence level. You remove guesswork and add back in confidence, and I'm here to tell you that you're a different trader from that point forward. If you want to learn everything there is to know about how to trade the gaps successfully, come over to check out the course at Lazy Gap Trader. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.